Family, what's up? Jamie here. Check this out. Today is the last day of my forward testing of the 2022 YouTube model. And boy, has it been fun to observe. I have been forward testing the 2022 YouTube model during the New York session between 7 to 11 a.m. I'm starting on this chart because I just wanted to say that this is the August candle. And this candle ranged from top to bottom a little over 2,600 points this month. And we closed with a little bitty doogie. I would say that if we use the daily bias exercise, since we closed above previous week's low, then our target could be previous week's high. Excuse me, previous month's low. We closed above previous month's low. Oh my God, sorry, folks. So we closed above previous month's low. So our target for next month is previous month's high. So we'll see how that goes. Today I thought that our draw on liquidity for NQ would be previous day high because we closed above this previous day low and we fell short on NQ. However, we met the target on ES. So I had made my little post here, draw liquidity previous day high. Let's see, I forgot to put NQ. And so then I made a comment here. I meant to say this was for NQ. ES took it, NQ, and YM did not. Arr. So that's that. So I'm just gonna walk through NQ for my journal to see what I see. I will turn on my it says hide all. I don't want to hide all. How do you unhide if I'm already hiding? All right. So this is a daily chart. This green box is actually a weekly fair value gap that I didn't previously have on my chart. Shame on me. So we had a weekly fair value gap, and then where price came and bounced, it was the BPR on the 4-hour chart in a 4-hour order block. I talked about that yesterday. So we got that. So looking at this, I'm kind of in my feelings because when my initial draw on liquidity was previous day high, and so it fell short of previous day high. And this morning when it was going up, again, I was at this retreat, so I wasn't able to like really focus on the markets and do any kind of analysis. But when I looked at it, I was like, okay, we're going to previous day high. Yay. And it just didn't happen. So I'm sure in here, I would have been looking for a long setup. And one of the things I need to do a little epilogue to this little series to remind myself to not be married to my thesis on where I think price is going to go. I need to just trade the chart and trade what's performing. So here we got a little bit of AMD. And so I would hope that this move down would, I would see the setup. I don't know what I would, honestly, because I would have been targeting previous day high, So that's a little annoying. I could remind myself about the time and price study that we did in Sunday Study Group, and that, based on how it printed, we could anticipate it for it to come back into the range, but I just didn't have, I don't know. I probably would have just been so attached because I tend to be bullish. I would have been so attached to it coming up here. So I just hope I would be able to shift I do want to point out on my chart that I have the previous day equilibrium on the chart. And when price opened here and dropped down, basically it just went down into a discount of the previous day's range, and then also came down to this 4-hour fair value gap here on the 10 o'clock candle. So as to not draw this out and make this video too long, I just want to say that up in here, I hope that, I would be mindful that we had some AMD. Oh, sorry, was not yawning until I got on here. So, um, for the 10 o'clock candle, we did have a little manipulation up, drop down. This in here, like we didn't really have a market structure shift in here for me to be looking at the trade, something taking this fair value gap until we dropped down below here, and then we retraced up to this fair value gap BPR up here. But I don't know that I would have taken that. So I maybe, if I'm anticipating price to come into the range, and maybe if I'm looking at ES, I would have to look to see what ES was doing at this time. Maybe, just maybe. Oh, we got this low right here for a market structure shift, but it still came all the way down, took this, and then came back up here. So I don't know that I would have saw that. Then we have the 2022 YouTube model here, came up, ran some stops here, had a displacement down. We have this fair value gap here, but since that fair value gap is so big, I think I would have targeted 50% of this fair value gap, or just, the BPR up here. So that is the setup, and it ended up working out. As I mentioned, it went down to the 4-hour fair value gap. I probably would have been targeting the new day opening gap. And actually, I would have got out here at the end of my work shift. So let's just give a look-see and see what that moolah would look like if I did. Oh, and I got a confession to make. I took a trade during NVIDIA. I was just like, I gotta do it, but I'm not proud of what I did because I was really just chasing price. I wasn't using any kind of strategy, or it was like old behavior, so I'm not proud of it. But I was like, oh my God, I know there's gonna be volatility for NVIDIA. I gotta do it. So I did. So again, my risk tolerance is always $500 generally. In this case, I would have got it. It's not, I would have been okay in the trade. It's not where my stop is supposed to be. I know I can drop my number of contracts down and, move my stop up further, but this is what I'm doing. So if I get in, take profit, let's say I went down to 6 p.m., 5,000, 2 contracts, or if I have the wherewithal to go to previous day range, 6,700. But if I'm really trying to stay committed to getting out of my trade during my work hours, then I would have been out there, gone about my day. Goodbye. I do want to point out that this inversion fair value gap right here is the first fair value gap that I saw form after 9:30. And it came back up to it right here. So, kind of chopped around on it here. Boom, boom, boom. Came back down through it. Came back up here. Got some resistance right here. Or it served as resistance right there. So that was that gap at work. I don't know if we came back up to it. What do we do when we got up here? Not a whole lot, but maybe that's what that chop is there. So I think that's all that I wanted to point out today. I saw this in here that I probably would have been taken. Let me see. Since I was bullish, let's see if I see what I would think or what I would trade as a 2022 YouTube model. Stops, ran, left those highs, came down here, came back. I think I just saw something in here. Ran these stops. Then it took this high, retraced back down. I probably would have got smacked right here because I'm sure I would have been like 2 contracts, risk 500. And I would have got smacked in my feelings, done for the day. So I got to be careful with that. Like, do I want to risk 500 or do I want to put my stop where it should go and make an adjustment to either trade micros or um less contracts, you know? So I think that's all I got for this final edition of forward testing the 2022 YouTube model. I don't think there's anything else I want to say about this. When I go into September, I want to work on another aspect of my discipline, and that is to trade micros. That's going to be harder than ever because if I see a great setup, it's just like, why not trade the mini? But the nice thing is if I trade it with my AMP account, I only have enough money in my AMP account right now to trade micros. So that's one thing that I can do to kind of force myself to trade micros. So we'll see. But this weekend I'll see if I can do a follow-up journal epilogue video to kind of reflect back on what I learned and observed this month. So that concludes the final video. And again, I made a boo-boo and I should be on video 22 right now. And this is video 21. So I don't know where I got off with my numbering, but it is what it is. Anyway, thank you very much for listening and I hope you have a good day. Bye.